Welcome back to The Exchange. Here's a look at the tech results that have been powering the major averages this earnings season, with Amazon on deck after the bell today. Microsoft's AI story impressed. Meta's efficiency and ad spending numbers came in strong. Those stocks ripping higher for the week. A little more mixed bag for Alphabet, still dealing with search headwinds and fears of losing the AI arms race. Now, later today, Amazon is out with its results. Its shares are up about 30% this year. Snap reports as well. And remember, that was the canary in the coal mine for digital ad spend a few quarters back. Both of these names are about 5% higher into these prints. Jason Helfstein is here. He's managing director of Internet Equity Research at Oppenheimer. I don't know, Jason, I don't like a rally. I've got First Republic, scars from Monday, I guess. What do you think about Amazon?
Yeah, I mean, Amazon, you definitely have investors kind of rallying the stock just on just the general mood, right? That number one, maybe the ad market is better than people thought, and we've seen the bottom. That cloud trends are maybe not as bad as people thought. You had inline numbers from Microsoft. Google Cloud, was stable. I mean, not super strong, but stable. And then potentially after kind of that GDP number you just got, maybe, you get, the Fed is almost done, which would be good and generally for these types of companies. So it's more of Amazon has kind of been, I would argue, relatively out of favor, and our investors are afraid that they're going to miss it into the print tonight.
Right, exactly. Let me kind of mention Snap in the same breath, because there the trends, I mean, some of the stuff that's going on with average revenue per user is not that encouraging, wouldn't you say? And yet, why do you think people are still excited?
Snap, there's definitely been a lot less interest from the buy side. Our work says kind of interest level from the buy side probably down half versus 3 months ago. A good amount of the strength that you've seen in the stock had to do with what happens to TikTok. And probably more investors who were short the stock saying, hey, I don't want to be short the stock, in front of more noise around Congress, around TikTok. Look, if you talk to advertisers, there's not a lot of kind of momentum around Snap right now. It's really been TikTok and then Meta, and Meta is very specific. Like, they fixed clearly a lot of the issues that were a headwind for them over the past year.
Right.
So look, maybe it's just not as bad. Like, the guidance implies revenue slows down pretty dramatically relative to the fourth quarter. Maybe it doesn't slow as much. Maybe they basically tell you that, they'll have stability and numbers go up from here. And we know if numbers go up, stocks can trade up for a stock that's, really out of favor right now.
Quick question on Meta. I mean, rarely do we see a stock with such a strong pop not only hold it but sustain it into the next day, and obviously that's what they're doing now. I was really impressed that they're raising. It's one thing to raise EPS and say we're going to have this third round of cost cuts. It's another thing when your revenue guidance is way higher. What was driving that, and is it a unique situation or a read-through?
Yeah, for the revenue side, they have fixed a lot of the issues coming out of the Apple privacy changes. That really is what it looks like. Things that they've done internally, things with machine learning, better figuring out what ads they should show you, and then being able to measure your conversion, getting advertisers to kind of ask them to just trust the machine to make the decisions. They also highlighted China. Direct-to-consumer sellers out of China sounded like really rebounded, and some of that may have just been without Facebook or an Instagram as an advertising outlet. They just couldn't find other ways to reach the consumer. And when Facebook fixed that, or Meta fixed that, those sellers came back on top of shipping costs coming down and China reopening. So you definitely had a lot of, I will call, Meta-specific factors that drove the revenue and I think the outlook.
That's really interesting, because if it's true, it speaks to their ability to kind of have that differentiated strength, maybe relative to some of the smaller players. And I can hear Alan Boomer smiling as you mentioned China as well. Jason, we'll leave it there. Look forward to the print. Jason Helfstein.